Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. Happy Thursday. Happy day after FOMC Thursday. We are seeing, the day after FOMC is a really challenging one, and probably even more challenging than the day itself, although I'd say yesterday was pretty challenging as well. And why is this? Because we have expectations around understanding, getting more clarity, getting more insight into monetary policy. Aside from that, going into Thursday, we have unemployment claims, we have our Philly Fed, we have Lagarde speaking, which is going to put for sure, the euro, the dollar, and likely treasuries in play. And then we have existing home sales and coming up at 10 o'clock. So we still have a little bit of data to contend with, but really the bigger story is twofold. One, when is the Federal Reserve going to cut rates? Now, September was widely expected to be a pause, and November is widely expected to be another pause. In other words, we hold that 5.25 to 550 target rate. December, this is where it gets a little bit more, not quite 50-50, not quite a coin toss, but if I consider adding 39.5 to 7.2, right? And I look at 53, even cumulatively, the hike is not outweighing probabilistically the hold. So into the end of the year, very likely we're going to hold and not see another quarter point hike. Okay, that's one of two things. The second thing is, well, all right, if pauses precede the eventual cut, when are we going to cut? And this is what's become very interesting. The cut has been pushed way out. There was a time where the expectation for a cut was as soon as March or May, the March 20 or the May 1 meeting of next year. This thing has been pushed all the way out, really, to July, where at the July meeting, which is July 3-1, now we're seeing the hold and the hike neck and neck. And in fact, the hold is actually 2 percentage points less than a potential hike. So this is the first time that Fed fund futures are indicating there's a higher, and I mean slightly higher, chance of that cut. This is way, way, way out into the year, and traders aren't happy about this. So it's not a matter of whether or not the Federal Reserve is going to hike again. It's when you're going to cut. And until that starts inching its way back to the March 20 or May 1 meeting, we're likely going to see some weakness. But let's talk about the weakness for a moment. Is September weakness really surprising? It's no more surprising than the unbelievable rally we had in July. Now remember, the easy peasy trading of July, great. Straight up uptrend, fantastic. That passes the baton to basically Dramamine world, which is August. And that August chop rolls into the first 2 weeks of September. By September 15, 16, this is 5 years of tendencies. We start to see where we are now, right? So, I mean, remember, gang, this is just a rhythm. And unless the rhythm has already been in place leading up until today, I don't want to suddenly turn on the seasonals, right? Either the seasonals have been in sync for the last 2 to 3 months, or they haven't. Clearly, these have. So uptrend in July, check. Chop in August, absolutely. Chop into the beginning of September, yes. And take a look. By September 16, here we are on that down slope. So the next question is, well, Rog, for how long? Probably until about the middle of August. So it looks like around October 11, we're going to have basically some double bottoming action the very beginning of October, and around the 11th to 12th. At that point, we end up with sort of an ugly, hard-fought move back to the upside through late October into mid-November. That's the rhythm. So as long as we're still in sync with the seasonal, this is what I'm expecting. So please don't think September weakness is out of the ordinary, nor that the timing is all that off. It's pretty much in sync with what we're getting, not just now, but we have since July. So I hope that at least gives us A little bit of, oh, this is kind of what we do in September. This isn't, oh, the world is coming to an end. And, look, all the fear-based talk is going to rear its ugly head again. When in reality, we knew if we're looking at the track, right? F1, we're looking at the track, it's hairpin corner time, right? We're going to have some challenges. This is not something that is unforeseen. Neither did the Federal Reserve say anything that really should have shook up the market. If there's anything that we're upset about is rate cuts are not coming sooner than July as of right now. Please remember, if we as traders want to communicate to the Federal Reserve, Fed fund futures, we got to keep a really close eye on these as we go month to month to month. If those target rate probabilities start to factor more into March, May, at that point, the Federal Reserve knows, Jerome Powell knows that's what we expect, and he's going to be pressured to deliver. So interesting game begins as of today within the context of a very seasonally weak time. All right. So with that being said, let's jump on into the charts. As always, best part of our show is your questions. So let's kick it off here. First up is, let's see, Amazon. Oh, sorry, I didn't scroll up far enough. Avi asks, hi, Raghee. Setup idea market having true gap. Yes. So let's head on over to, for example, ES. So there are two kinds of gaps. There's sort of this vanilla gap where we're opening below the previous session close, but then there's this true gap. And that's below the previous session close. And in this case, the previous session low. Yes, this is a lot of weakness, no doubt. Can I go long intraday after a 5-minute candle closes higher? I would be cautious, but I typically wait, Avi, for at least that first 5 minutes to transpire. And then at that point, if I have a 5-minute breakout, yeah, there might be a little bit of follow through after that. Sure. I don't have a problem with that. It's a pretty basic gap setup, but don't presume a gap close. Just presume a little bit of a retracement. And at that point, maybe there's some momentum. It's a scalp, really, is what it probably would be. All right. So let's see. Relief asks, all 4 markets are red. Yes, they are. Any rebound possible? I don't know. I'm going to just trade what I see, not what I think, not what I guess, not what I feel. As long as they're red, all I'm really going to look for are limit orders to sell the futures or long puts. So until we get some sort of transition around the structure, which is red, as you mentioned, for me, the red is the lower row of this multi-trend tool, right? As long as that lower row of those 2 rows running parallel at the bottom of my screen, as long as the lower of the 2 is red, all I can do is short. So we'll see what it is that happens here. So a question from our essentials room, QQQ. So if we're going to take a look at the QQQ, I'm going to take a look at the NAS first, my friend. And the reason for that is the QQQ is a 9:30 to 4 conversation, right? The NASDAQ is nearly a 23-hour conversation. So we've been heading lower since just after 4:30 a.m. Eastern. So as long as the Qs on the 5-minute are in a downtrend, whether that be NQ, MNQ, I won't be looking for long positions, long calls. Nope. So then this is really where it comes down to time frame and time horizon, right? The symbol itself is just sort of where we're all collectively looking. But more specifically, the decisions are made not on the QQQ or the NQ, or even long calls, long puts. It's made on what time frame are we looking at, and therefore what time horizon are we looking to trade. As a 5-minute trader in the morning, I'm going to be day trading. I'm looking for follow through the next 20, 30, 40, 60 minutes, what have you. Short term, going to be flat by the end of the day. If I look at the NASDAQ daily, look, gang, even though we've sold off, the chop is still very much the psychology. We are in a range, right? We are absolutely in a choppy range. We've been lower, right? Back August 18, we've been lower. Clearly, we've been higher, but we're stuck in a range. And as long as the lower row of the daily time frame of my NQ is yellow, I'll continue to look for overbought, oversold opportunities. And if I don't trust follow through, or if I'm not at an overbought or oversold edge, I'll shorten the time frame, maybe to a 1 hour. And the 1 hour is indicating that the only thing I'm allowed to do is short. So each time frame is going to present to us an opportunity based on the interval of the candle, right? If I look at the QQQ daily, it's a very different opinion than the 1 hour or the 5 minute, both of which are bearish. All right, next up from our essentials room is Schwab. All right, so Schwab is a relatively heavily weighted name in financials, right? So if I'm looking at Schwab, let's go up the food chain. I'm going to start at the Dow, right? From there, I'm going to go to the financial sector, XLF, and from there, I'm going to look at Schwab. And there's two ways really to do this. Index sector stock, as I've just done, which is something that I know a lot of you know is absolutely the process that we use in the Sector Secrets Mastery. The other thing I can do is this thing right here. This is the multi-chart of the heavily weighted stocks within the XLF. Schwab, I don't believe, has broken back up into the top 11, but I'm going to compare Schwab to other trends within the XLF. And if you take a look, let's see, where is Schwab now? Schwab is just below Chubb. So it's down around 14. Berkshire's in an uptrend. MasterCard's in an uptrend. Bank of America's in a downtrend. There's your weakest stock amongst the heavily weighted. After that, anything that doesn't have a green trend or a red trend is a choppy market. And if it's a yellow trend, now I'm going to ask myself, hey, is it like Goldman, or is it like Morgan, where I'm trading just above the 200? Or is it something like BlackRock that's broken the 200, right? And those are things that I'll start to look at. Where are we above or below that equator? So Schwab, in that regard, let's go back on over here. Schwab is below the equator. Tough to be really optimistically a buyer here. And it's obviously red on the 1 hour. It's red on the 5 minute. And so this is where directional bias is the most important thing. What is the best example of a trend? Then what is the probability in terms of follow through? And for me, it's got to be a little bit more to the downside with Schwab. But again, I think that if we take a look at the environment that we're in, and that is post FOMC, but pre end of quarter. If you think about the end of quarter behavior, where a lot of money managers, fund managers are going to want to start to bottom pick, try to find those bargain basement prices on names that can have a really good Q4. And then that's the report card, gang. That is the most important report card for anyone managing money. How did you end the year? The best way to show that the end of the year was a successful one, that Q4 was a profitable one, is to buy things that have the probability of moving higher. So think about those heavily weighted names, the NASDAQ, Dow, S&P, that are still above their 200, right, but have been hit pretty hard. Those are your blue light specials. That's the bargain hunting. And that's where Schwab, for me, wouldn't necessarily meet that criteria. So I'm thinking about not just between now and next Friday, but after next Friday, what are the likelihood of something like Schwab benefiting from some bottom picking the first 2 weeks of October? But again, this is a little bit longer term and time horizon. So I guess the main thing is, when we're looking at certain names, and I gotta tell y'all, gang, something straight up. Individual stocks, while interesting to talk about, should never be taken outside of the context of their weighting within the indices. So that's what index sector stock means. So for example, Tesla. People love Tesla. I got to tell you, most days I don't even think about Tesla until I've got clarity either on the NAS or the S&P, or more specifically, I've got clarity in consumer discretionary. So there's two things that are really important. I ask myself two things. How do I want to structure my trading life, right? Because set it and forget it. Let's be real. I know that's a very sexy thing to talk about. Let's do what we do and go disappear. As if. I've been doing this for 35 years. I've got to make some decisions here. This is a job. It does require some time. I know all of you know this. Otherwise, you wouldn't be here at Charts and Coffee, 30 minutes before the bell rings. So let's not get enticed by that illusion. We have to put a little bit of work in. But how are we structuring our trading life? And that's where I say, day trade about the first hour of the morning. Set up some short-term, short time horizon opportunities at the best hour of the day. the best possible follow through for the day. Then take the middle of the day off. Go do the things that life requires, whether that's working out or paying bills, whatever it is. We start to, handle the midday doldrums and go live our life. At the end of the day, the last, say, 90 minutes, I can either day trade again, or I can start looking at daily or hourly timeframes for overnight or swing trading opportunities. So first of all, that's structure, and how are you structuring your trading life? That's one thing. And then how many stocks are you looking at, right? I don't look at that many names. And unless, for example, with Tesla, unless I've got the clarity up the food chain at the NASDAQ or S&P level, and then at the consumer discretionary level, which, by the way, is also going to open up Amazon. When traders ask me, Rog, how many names are you looking at? Remarkably few. S&P, NASDAQ, Dow, Russell. What are the heavily weighted sectors? That's going to lead me to about 7 other sectors. 7. I'm at 11 symbols total. And then I'm going to add to that maybe 1 to 2 heavily weighted stocks per sector. So yes, I'm well under usually 20 names. It's usually far less when we start to whittle down those names as to who has structure. So please limit, right? Please limit what you're looking at. I know a lot of folks think, well, let's scan for the best opportunity today. I haven't found that's a path to success. So the reason I go on that little PSA, that little public service announcement, is anytime we're looking at individual stocks, ask ourselves, why? What is this stock doing that's meriting my money and attention? Is it because, for example, Google, it has a strong or weak NASDAQ? And then what's the next index sector? What's the next for Google? XLC, the communication sector, where it shares space in the top 2 with Meta, right? So if I'm thinking index sector stock, NASDAQ, XLC, Amazon, Meta, right? Or I'm sorry, Google, Meta and Google. That's just 4 symbols. And I really want them to be in alignment because that's where the probability is going to be best. Gang, that right there is at the heart of what I do in the Sector Secrets Mastery. It works. And let me tell you why it works, why this is better than any kind of scanning or anything else I've got on my chart. We live in a high concentration weighted world. Whether we like it or not, we can acknowledge it or we can stick our heads in the sand. The reason this works is because the weighting of stocks in the indices are high concentration weighted, which means a very small number of names dictate, for the most part, what the index is going to do. S&P 500, for example, 500 names. Does it surprise anyone to know, maybe it might, that 6 names are pretty much 20% of the S&P 500? That's significant weighting, significant influence over the index. And the more we ignore that, the more we ignore that the S&P is about 6 names, the more that we ignore it's basically tech, financials, healthcare, the further away we get from the follow through. So that's why I share these things where a lot of us start off with, hey, where's the stock going? But go up the food chain, gang. Listen to me now, believe me later. It simply works. So if we're taking a look at Apple, really easy. This is one of my favorite names, by the way, for some Q3 to Q4 blue light special buying. One of my absolute favorites. Still above the 200 on the daily, still choppy, definitely been hit hard in the last 2 months. All right, so I look at Apple, but again, it's NASDAQ or S&P, XLK, where Apple shares space with Microsoft, and then I've got, again, just 4 symbols. The index, the sector, and now 2 stocks, number 1 and number 2. And I've got a pretty good feel for what it is this group is capable of doing. They really do have to work together. They really do. So those are things that I would look at. Also, remember, gang, we're not going to, from a seasonal perspective, we're not going to see strength until we move into really mid-October. If we're going to see seasonal strength. And that's actually going to correspond, interestingly enough, with that blue light special idea that I have and that I take advantage of, which is Q3 to Q4, what is still neutral but above the 200 and would reflect a really good bargain hunted buy, right? What stocks have the possibility of moving higher? Like I said, Apple's definitely on that list. Microsoft's on that list. And that's the list I'll be putting together between now and Friday, which is the last trading day of the quarter. In the meanwhile, I'm going to keep intraday day trading. My mastery folks know we're sitting at about a 67% win rate. That means for every 10 trades we're putting on, we're winning 6 to 7 of them. not because it's magical, right? It's because we're shortening the time frame and we're not demanding that this environment give us overnight follow through. That's been remarkably difficult and rare to come by. So shorten the time frame. Today we might be bearish. We'll see. We'll see if we can hold this weakness going into the open, which we are most definitely getting. But that's the way I'm going to process this environment, gang. Think about time frame. Think about time horizon. Index sector stock. I mean, that again is absolutely the not so secret of what we're doing in Sector Secrets Mastery. All right, gang, be good to each other. My futures folks, my mastery folks. I'll see you in just a moment. I'll see you tomorrow, same time, same station, gang. Be good to each other.